Good morning, traders and investors. It's Tuesday. It's May 2nd, and I still don't know where the year has gone. My name is Roger Scott, Senior Strategist for Wealth Press. It's about 7:42 in the morning. The market's going to gear up to open up in about an hour and 40-something minutes, 48 minutes to be exact with you. Don't get me down to the second, but it looks to be right. Now, as you can see here, the Nasdaq's down about 3 points. The Dow's down about 60 points. This is very random trading action. I wouldn't make much of it because the trading range has been kind of wide. Now, one interesting thing I do want to bring to your attention is how choppy the Dow Jones is right now, and it looks like we might have a reversal to the downside. I warned you the other day that the upside looks very, very toppy, especially when you look at the RSI with it as well, and you see the level of divergence we're seeing right now. Look at that. Higher high, right? And look right here. Lower high. This divergence typically means the market has topped out. Also, if you look at the QQQ, you will see a very similar type of pattern. Higher high, lower low. So I would be very, very careful. We need a major catalyst to keep the market higher at this point, and I honestly don't think we're going to get one. So I'm expecting more choppiness or consolidation, especially a move that we saw the last couple of days where the market went up pretty high. S&P is seeing the exact same type of thing right there. So to me, this looks like a bunch of algos came in and decided to start selling this market right at the top right here, which wouldn't be a big surprise because many sectors are showing the same type of trading action. Look at communication service sector. Look at that. And if you look at momentum levels right now, I'm just trying to put all the pieces of the puzzle together for you. If you look at momentum levels on the communication sector, which is what I just showed you, you will see that it's very, very choppy at this point. It looks like it might have topped out. Oops, sorry about that. Looks like it might be topping out right here after this downside move. It's very common to see these moves to the downside and then a reaction kind of like this, kind of like that afterwards. But right now, the stability of this market is just not as good as it was a few months back. So we got to be really, really careful, and that's why I'm increasing my short position right now. Another thing I want to talk about is the TLT. Now, another algos, man, there's going to be a lot of talk about algos this Friday. See, this right here looks like a typical shakeout. You wouldn't see it go lower. Now, why did the bond market snap lower like that, right? Increasing rates very fast and then snap back up today. It's already up here. Let me just go a little closer. So you could see it went down here and then the bond market's up here now. Well, the reason for that is we had a big fear, big fear over here when it was going higher, that we're having another banking fiasco, and then Wells Fargo went and rescued that bank that's been the third bank that's been going under, and interest rates went back, bonds went down, and interest rates went back up because of the relief of that pressure. There's not going to be a banking fiasco. Wells Fargo or Chase, JP Morgan came to save the day, not Wells Fargo. I don't know why I have Wells Fargo in my mind, but the point I'm making is that it looks like we're getting a little more stability because it doesn't look like things are going to get as bad. So again, bond market's pulling back up. I think it's going to stay in this range, be very, very choppy because interest rates going higher, which is the direction they've been headed to in the last few days, is not very bullish for the QQQ, which looks to me, as I mentioned before, diverging and also at a tipping point right now. And I'm not suggesting it's going to go all the way down, but I think we're going to get a little more consolidation and stay in this type of a range that we're seeing right here. I think this is too much too fast. I think earnings were just too good. Initial earnings were too good, but remember, we've got more earnings, and this week is full of earnings, and they may not be as bullish as the infotech or the tech earnings that we saw last week because we're a little broader. Speaking of earnings, today, I think after the close, you're going to get AMD. That's going to reflect tremendously on the semiconductor sector. So you want to keep your eye on the chip stocks, which are right here. Let's see how they're doing. AMD's huge, and AMD's big for the personal computer space, and it hasn't been doing all that great. As you could see here, the semiconductor, it looks like it bounced up, but it doesn't look like it's up here like the rest of the QQQs. Look at that. So to me, it looks like there's going to be some weakness coming in, and if it's triggered by the chip stocks, I wouldn't be surprised. You also have Pfizer. Now, interestingly, They're looking at shares. Look at this. They're looking at EPS. Now, everybody's wondering why earnings are coming out so good. I'll tell you why. Look at this. They're looking at earnings, EPS, to be down only 50.4% from a year ago. Only 54. Hey guys, I'm reporting earnings. I'm one of the biggest chip companies in the world, and we're coming down with half of what we reported last year. Of course, it's overdone. I mean, with earnings estimates got down this much, how do you not beat them, right? Revenue is forecast to be down 10%. Now, most companies, tech companies, are breaking revenue records right now. Not earnings per share, but they're not doing bad on revenue. Money's coming in. They're just their profit margin smaller, but not in this case. Then you have Pfizer. Pfizer is only expecting a 40% haircut from a year ago. And you're wondering why stocks are surprising earnings, why they're better than expected. I mean, look at these earnings. 39% lower, 50% lower, 35% lower revenue. I mean, come on. But you've got other stocks reporting today. You've got ADT, ABC, AmerisourceBergen, that's a financial company. British Petroleum, Caesars Entertainment. I can't wait to hear that one. Chesapeake, Clorox. We took actually, we didn't. Celeste took a profit, I think, yesterday on MGM. Let's see here. Denny's is coming out. Extra Space Storage is coming out. Ford is coming out. Gardner's coming out. I can't wait to hear what Ford has to say, especially with their hybrid cars. Very interested in hearing what they have to say with their hybrids and their electric powered ones, but hybrids really. Match is coming out. That's been on my cutting block for a while. You know, yesterday I made a list of about 20 something stocks I wanted to sell short, and I think by the time I was done with the earnings analysis, there was only 10 available. So out of 25, like 10 were available. So it's tough right now. It's tough all over. QSR restaurant brand, Sealed Air, Simon Property Group, one of the biggest malls. That'll be very interesting. Starbucks, I want to see how consumers are spending. Uber's coming out today. That'll be interesting. Zebra Tech is coming out. And Yum China, Western Union, a lot of companies. And then tomorrow, same thing. Same thing. I mean, literally the same thing. And on Thursday, you've got Apple reporting. Now, let's talk a little bit about global economy. First of all, you've got FOMC meeting beginning today. So expect market data today and tomorrow to be somewhat muted unless earnings are really, really out of whack. You've got factory orders, you got JOLTS today, and then tomorrow, Mr. Squirrely, a.k.a. Powell, comes out with the announcement. Now, I think at this point, the odds of a rate hike of 0.25 is really priced into this market at like over 90%. So it should, or let's see here. It doesn't say here. I'll look at it in here. But yesterday was like over 90%. So I'm not really expecting too much of a move unless he says something really surprising. And I don't think he will. He may mention something about banks, but First Republic rescue. But I think he's going to be pretty broad. So investors are waiting First Republic rescue while bracing for central banks meeting and bunch of quarterly earnings and crucial U.S. economic data. I mean, crucial. In Monday's session, financial sector was in focus with shares of JP Morgan rising as they won the auction to take over the failed First Republic Bank. They acquired about $173 billion of their loans, $30 billion of securities, $92 billion of deposits. That's going to be a very interesting move, but they came to save the day, which caused the bond market to back off a little bit. Data on Monday showed that manufacturing stood at 47.1 in April, stronger than expectation of 46.8. Also, March construction spending came in at 0.3%, stronger than expected. So Fed data is not coming in that bad. I mean, it's not coming in that bad at all, actually. First quarter earnings, again, they're not heating up. They're pretty hot right now. You got Pfizer, you got AMD, you got Starbucks, you got Uber, you got Thomson Reuters, you got Marriott, you got Ford. I'm looking forward to seeing how Marriott and Ford do. Now, here's the good part, and here's why the market rallied so hard the last 3 or 4 days. We were expecting 5.1%. We're now only down 1.9%, and it seems to be continuing. I thought it was going to heat up to the downside after the first few days, but it's not. So that's really what's causing the market to go higher, but there's only so much the market can do. And remember, these earnings have been beaten to death. The Federal Reserve kicks off a 2-day meeting later in the day. Investors are watching for the Fed to raise rates by 2.25. That's pretty much priced in. They'll be closely watching Mr. Squirrely's post-decision press conference. European Central Banks is expecting to lift interest rates by 25 basis points as well. Today we're looking at the JOLTS job opening report. and they're looking at about 9.775 million compared to 9.931 million. It's not a huge report. Also, factory orders are coming out. Honestly, all eyes are on tomorrow's FOMC. Europe is down 0.25 this morning as everybody's in Europe digesting and waiting for U.S. Fed data to come out. That's their biggest factor right now. Japan, they closed higher today, but well below its session highs as jitters around the U.S. banking system shook the financial system across the world. Japanese yen dropped to nearly a 2-month low, lifting shares of export-oriented companies. That'll be interesting. I'm expecting the yen to rally really hard and their rates to go higher during the second part of the year and into 2024 because they have a new prime minister. Stocks you need to watch this morning: Chegg, it's down 44%. NXP climbed 4%. Keep an eye on AMD. Chip stocks are doing better than expected so far. Dell, it'll be interesting to see how Dell does because they're up 2% pre-market. They were upgraded to overweight. Now remember, there's a lot of AMD stocks inside Dell computers, so keep an eye on that as well. And again, as I mentioned, you've got Pfizer, AMD, Starbucks. It'll be very interesting to see Starbucks. Ecolab, Ford, Marriott. I mean, you name it, it's coming out. I mean, look at all these companies. And I have a list here of all of the companies and their EPS. And remember, Pfizer's looking at like a haircut of, let's see here. They're looking at a haircut. Look at all these earnings I have to go through. Of 39.5% on their EPS from a year ago. And AMD's looking for at a 50.4. Now, how did they not beat expectations, right? Now, let's go into sectors. Now, I'm using the 1 month right now because I think the 3 month is totally distorted. Technology, communication services are still on top. Consumer staples is third. But if you look at it on a monthly, it looks very, very different. Technology is already in the second part of the bottom. Consumer discretionary is all the way at the bottom. It's interesting that industrial stocks are all the way at the bottom. That's because there's a fear of a recession. But honestly, I love healthcare. I like consumer staples. I like financial. I like utilities. Energies, we got to be careful right now. And basic materials, we got to be careful because of industrial. But the fact that real estate has been holding on is a very strong sign. Consumer staples, healthcare. I would go with utilities, financial, consumer staples, healthcare, and real estate right now. I would be really careful with communication services. Excuse me, got hiccups. Or technology, or consumer discretionary. I would be really, really careful with those right now. Now, looking at the top stock, let's look at the top stock. Let's see what we like here. Oh, First Solar dumped. Look at that. Las Vegas Sands is looking good. I love Lamb Weston. I said healthcare is looking really good. General Electric and Lamb Weston. These two stocks right here. And also Pulte Group. So you got Lamb Weston, Pulte Group, and General Electric. Those are the top three right now if I had to bet. If I had to put money on it, those are the top three. D.H. Horton's not looking bad either, but I like that. And Cardinal Health is not looking bad. I told you, healthcare, consumer staples, and you don't want to venture too far out right now. Basic stocks, industrial, basic materials. I mean, look at General Electric. Although industrial, we got to be careful, but GE is a pretty well-rounded company. It's not like a real deep industrial company. But here's Lamb Weston. Here's Cardinal Health. Those stocks are looking fantastic right now. Just make sure there's no earnings. Now, to the downside, oh boy. To the downside, you're not going to hear anything new from me. You're going to hear the same song and dance. Generac. Lincoln National, Match, VFC, BXP, Boston Properties. I almost sold this one the other day. I don't know why I didn't. I may sell some of these today. They just look awful, and they're starting to come down. Fidelity National Services, Key Corp, and I think, what are we short right now? We're short. I don't remember. We're short one of the stocks right now, actually, one of these nasty stocks, and it ain't looking all that great. AAP's looking bad. But honestly, Western Digital, man, this stock looks like it's a goner. Western Digital, I would sell this stock, and I would, or maybe even Live Nation. But there's a lot of nasty stocks. But if I had to pick one, it would be Western Digital. Western Digital just looks awful. And if you want me to give you a second one, I would say Boston Properties. Those don't look good at all. Now, before I let you go, I've got something exciting to tell you and interesting. Folks, there's been a lot of ups and downs in the stock market, and that's an understatement. There's been a hell of a lot of ups and downs in the market. My good friend, Jack Carter, he's a fellow trader. He has something exciting that could be a game changer during these difficult market conditions like we're seeing right now, especially during earnings. It's a hidden stock calendar. That's right, a hidden stock calendar that he recently discovered. And he just revealed the calendar and 10 potential trades that it's highlighted right now. Click the link below, watch his presentation. It's very different. It's great right now while trending assets are going a little crazy. The volatility to take advantage of it is perfect right now. And get this, out of the last 100 trade Jax took, he had like a 97% win rate. Out of 100 trades, real trades, not some cockamamie ideas. Follow the link below. If you don't know where to find the link to the free presentation Jack is holding, you'll learn all about this stuff. Go to the YouTube Wealth Press channel and find it there. That's YouTube Wealth Press channel. You can like this video, subscribe to our channel, and post comments. You got to post comments for me. That drives me to make these videos better and more productive. I'll talk to you guys soon. I hope you watch these actionable videos every day. Sign up. Telegram channel link is there. Everything is there. And don't forget, Jack's giving away 10 potential trade opportunities in this class. You don't want to miss out. Follow the link below, and I'll see you guys soon. Bye.